Good afternoon, ladies and gentlemen. My name is William H. Thompson, CPA, MBA, and I am the founder of RE Accounting and Tax Professionals. We help real estate investors maximize return on investment through expert tax strategies, while at the same time helping them to build and sustain a legacy. Welcome to Free Information Friday. Today I'm going to talk about tax forms that real estate investors should have an intimate knowledge about. And when I mean intimate, I mean you really need to understand what goes on and how it flows. Now, I'm not asking you to be the tax strategist. That's where our firm comes in. But a good real estate investor will know what's on each form and where it flows to. So let's start with Form 8582, Passive Activity Loss Limitations. This is the form that will hold all of your passive losses that you were not able to use on prior tax returns. How does that come about? Well, for one, if you have not obtained real estate professional status, you can't write your losses off if your adjusted gross income is over $150,000. So two important places on Form 8582 I want you to be aware of is line 3. This is where all of your passive activity losses will be housed in total, not in detail. And in the middle, that's in part 1. Now, in the middle, on part 2, is where the calculation is made to determine whether you qualify to write off your rental real estate losses. Bottom line is that's where they compare your modified adjusted gross income to the $150,000 threshold. So this form is important for you as an investor to know what passive losses you have available to write off against future income from your rental activities, or if you sell a property. So I want you to be well aware of that. And the second form that I want you to be aware of is Form 4797. This is the form that is utilized when you sell a property. It's going to help you determine what your basis is, what your proceeds are, what depreciation has to be recaptured, and how. So if you're, just say you sell one property, you take a look at that, take a look at Form 4797, you'll be able to determine your cost basis, your proceeds, and what depreciation is going to be taken back, recaptured. It could be Section 1245, 1250 unrecaptured, and 1250 recaptured depreciation. And this information will flow onto your 1040, which is your main form where you report everything. It will flow off onto page 1 of your 1040. I believe, yes, it's line 7. So this will be your taxable gain. Now, if you do have depreciation, any type of depreciation recapture, that's going to be calculated on Schedule D. So on Schedule D, it's going to determine how much depreciation recapture you're going to have and how much ordinary capital gains you're going to have. And keep in mind, if you sell the property in less than 1 year, those capital gains are going to be at ordinary rates. But if you hold the property for a year or more, you're going to take advantage of the long-term capital gains rates, which vary from 0% all the way up to 20%. So keeping an eye on this form is very crucial for your tax planning. The next form is Schedule E. This is where you keep track of your income and expenses for each one of your rental properties. And this is very important because when I review, as part of what I call my Financial 360, I review prior year tax returns for clients to see if anything was missed or if anything was incorrectly reported. And what I see a lot of times, I see a lot of folks miss auto and travel for their going back and forth to their properties. I see them miss property insurance. Sometimes you'll catch them. Sometimes you'll catch them missing property taxes. But the biggest thing that I've caught is real estate investors not knowing and not depreciating their property. Depreciation is a silver bullet to help you reduce your taxable income. So these are items that just glance at Schedule E, look down the expense area, and see if any of these items are missing, because it could cost you thousands of dollars in taxes, and that's we don't want to see that. And finally, the Form 1040, which all the forms that I mentioned previously flow up and into the 1040. So, for example, on line 8 of your 1040 is where you would see all of your gains and losses from your real estate activities. And also on there, you would see any profits or losses if you have a C corporation for your fix and flip business. So where that comes from, the detail of that comes from on the 1040 Schedule 1 under Part 1. So I believe it's line 3 of Part 1 of Schedule 1 will report all your activities for your S corporation, and I believe it's line 5 where all the rental activities are captured. And these are summed up on Schedule 1, which I had mentioned goes to your line 8 of your 1040. So the reason why I want you to be aware of all these forms is because they have tax implications. If something's not reported right or something's missed, your tax liability is going to be either overstated or understated, and you want to try to avoid that at all costs, because that could raise a red flag to the IRS. So I hope this segment of Free Information Friday was helpful to you. And if you're a real estate investor who wants to maximize return on investment through expert tax strategies, while at the same time helping to build and sustain your legacy, book a call with our firm. And remember, only you can create your empire, but we are here to help every step of the way. Thank you, and I wish you much success on your real estate journey.